Hey, what's up, everyone? Welcome back to my world of stocks and welcome back to my 3 stocks on sale series for the month of February 2025. Fun fact, my birthday is actually in February. Of course, you do not have to get me any gift. Just clicking on this video means the world to me. Thank you for that support. But if you ever do want to go above and beyond, you can check out our Patreon down in the description. It also gives you access to our community Discord if you sign up, where you can hang out with me and other cool people. And I'd love to see you on there. But again, just thank you for watching my videos. That really means a lot. Anyway, if you are new to the series, I give you 3 stocks every month that I feel look very attractive at today's prices for the long term. And to make it a little more fun and interesting, I specifically chose one lower risk, one medium risk, and one higher risk option for some added variety. Now, as always, though, just please do your own research and make your own decisions. But going ahead and starting here with the lowest risk option first. Well, you guys know that I am absolutely in love with REITs right now, and my favorite among all of them is currently Vici Properties, ticker symbol VICI. Now, why do I like REITs so much at the moment? Well, it's the one area that I just feel the market is not yet forward looking on. See, as investors, we all know that concept of companies trading higher because of what analysts expect from them in the future, like in artificial intelligence, for example. So many of those have skyrocketed in recent years because we all expect AI to have a huge impact on the world, maybe even be running the world at some point. However, REITs, on the other hand, well, ever since the pandemic, they've faced almost the opposite reaction from the market, partly because of rising trends like remote work and online shopping that have destroyed traditional brick and mortar stores, shopping malls, and even office buildings. Those properties tend to be owned by REITs. Well, on top of that, we're also in a high interest rate environment because of all the pandemic related inflation. And that in itself has actually caused, I would say, 3 important primary concerns. Number one, REITs typically rely on debt to finance property development and acquisitions, so high rates makes borrowing money more expensive for them. Number two, it raises the yield of risk-free alternative investments like treasury bonds, making them more attractive now and compared to REITs who are mostly known for their big dividends and payouts. Well, number three, higher rates also tends to hurt property values, thus reducing the NAV of REITs, the net asset value. And so all of those things, in my opinion, have really held REIT stocks back at a time when the rest of the market has actually soared. But here's why I'm actually a buyer of REITs now, and especially in Vici, among a couple others too. But first of all, interest rates have to come down at some point. And I know that's a hard concept maybe for short-term traders to understand, but as long-term investors, we know that present struggles usually mean buying opportunities for the long term. So I'm not concerned about them, even if the market is. I think eventually rates will come down. And number two, all of those pandemic era trends I mentioned before don't really apply to Vici, as their properties mostly consist of casinos and entertainment properties. Notably, some of the biggest casinos in Vegas, including MGM, Caesars, Venetian, Mandalay Bay, and more. Not to mention even 4 award-winning golf courses and 38 Bolero bowling locations. But the giant casinos are really my favorite of the bunch because they're under huge contracts and are not likely to ever relocate because of their massive size and the strict gambling regulations. It'd be really hard for them to just pick up and leave and, go sign up somewhere else. Nor would they ever really want to when their businesses have been doing so well and have been really resilient, very strong for decades, being flush with so much cash. I mean, the house always wins is not one of the most famous proverbs for nothing. Hence why Vici was able to collect 100% of their rent even during the worst of the pandemic lockdowns in 2020. The result also being that they have way higher average rent per asset compared to rivals, with much higher barriers to entry, much higher lease terms, lower cash flow volatility, none today really, and usually higher growth too, with rising funds from operations, which is one of the most important profitability metrics for REITs. And yet the stock price has been very suppressed in my opinion, only rising by 60% since IPOing many years ago, leaving their price to FFO more than 15% cheaper than the sector, and their dividend at a mouth-watering yield of close to 6%. I mean, I just can't tell you how attractive that is for this type of business. So I'm buying here for the long term while I still can at these levels, despite really any short-term issues or concerns following the pandemic. All right, guys, moving on to stock number 2, though. This will be our medium risk option. And this month, I think I chose a very good option here. I really like it, but I'm going with AMD, ticker symbol AMD. And, I actually just put out a series of AI videos. I gave you guys 7 AI stocks in total for the year, but I left AMD off the list. And, part of the reason why was because I wanted to include stocks that I owned myself and was most excited about, which I do not currently own AMD. However, I am heavily considering picking some up now, and I just can't tell you how many of you actually messaged me saying you couldn't believe that I didn't include them in the list. So I decided to include them here and tell you why I actually agree with how a lot of you guys feel that this is really one of the best AI stock options at the moment. Now, the reason I put it in medium risk is because they do report earnings this week, which, anyone familiar with AMD knows just how volatile it can be, especially on earnings. But even if earnings cause the stock to fall more than it already has, I would swoop in there really fast and buy up shares because I absolutely love what AMD is doing as a company. And that's really carving out a kind of niche piece of the AI chips market behind NVIDIA and Intel, trying to offer comparable performance in chips that may not be quite as powerful, but that are significantly cheaper on price, thus giving both consumers and, more importantly, big corporations a cheaper alternative when they're buying at scale, which is a great thing for also artificial intelligence, because I think the market will easily be large enough to support multiple players in that space. And so whenever there's a company on a tighter budget that still wants to compete in the bloodthirsty AI market and be able to scale AI operations with powerful hardware, but at a much more affordable price point, well, that's exactly what I feel AMD offers. For example, NVIDIA's H100 AI GPUs have at times costed up to 4 times more than AMD's competing MI300X chips, despite having very comparable performance, sometimes even better, depending on the configuration and task. Now, there are reasons for this. NVIDIA has seen major supply constraints given the gigantic demand for AI right now. Plus, there's just so many AI applications and workloads optimized for NVIDIA's CUDA software stack that it really does give them a lot of pricing power. Now, AMD has been improving their ROCm software, but most developers agree that it's just not as good as what NVIDIA offers, and will probably remain a hurdle for them, trying to steal market share. Plus, more recently, NVIDIA launched their new Blackwell chips that offer a huge performance increase to those previous H100, Hopper line. But AMD is trying to compete with those too, launching their own MI325X and the upcoming 55X AI accelerators, with 55X being the real competitor, showing a good amount of performance there. Of course, by then, though, NVIDIA will likely be close to releasing their new Rubin line, which will be even more powerful than that. So as you can see, it's just like a constant race for power here. Excuse me, with AMD almost always being a bit underpowered compared to NVIDIA with less optimization, but at significantly lower price points. Again, a strategy that I think will actually work for them long term. And the same goes on the CPU side, where they've done an amazing job of stealing market share from Intel, particularly thanks to their EPYC line that currently has a very powerful 5th gen coming out in the market. The GPU market is a lot harder, I would say, as NVIDIA has actually taken share from AMD. A lot of people don't know that, but that's because of just how on fire they've been with AI. And that's actually a reason why I own so much of the stock myself. I used to own way more of AMD, but I actually sold that for a huge profit a long time back. It's documented on the channel. And then I went even heavier into NVIDIA, which has also given me, really good gains, but I still own my NVIDIA stock. But, more recently, AMD stock has actually been falling really hard, losing close to half of their value from the top, leaving behind what I feel is a pretty cheap valuation with a PEG ratio of less than 1. That is also 55% cheaper than the sector, despite them being, such a huge play on AI. And what is also really a duopoly in both the CPU and GPU markets, where again, I think they play a critical role just behind NVIDIA and Intel. So much so, in fact, that despite their sales and profits both expected to set a record high for 2024, well, the year after, analysts are still expecting them to grow another 25% and 52% respectively despite that. That's incredible growth for an incredible company in AI. And if earnings this week send the stock even lower, I'm going to be a buyer myself, and I'm going to have to start picking up some shares despite already owning so much of NVIDIA. All right, guys, it's time to finish up though with the final stock. And forgive me, but I'm actually going to throw in a very high risk another AI stock that most people should probably not own because they likely won't have the patience for how volatile and risky, really this stock can be. But for me, I bought a very tiny amount with the idea of adding to it very slowly over time as their prospects grow and the stock hopefully becomes less risky over that time. But I'll run you through all of this. It's the speculative biotech Recursion Pharmaceuticals, ticker symbol RXRX. Now, just to put it plainly, this is a company that uses AI to speed up the discovery and development of different drugs, which is a very compelling proposition. When you're dealing with life-threatening disease and illnesses, time is probably the most important factor to deal with, because the faster that you can get treatments developed and into patients, the more lives you'll save, the sooner you'll prevent worse outcomes. And because of that, it's been a giant area of investment for biotechs, all competing to see who can get it done faster. Well, Recursion is a huge play on that, especially with the addition of artificial intelligence, which is also where everyone is pouring their investments into as well. And so that right there already catches my eye and it gets me interested in the stock. However, the problem is that they haven't had much of any commercial success yet. The company was founded in 2013 and received their first green light for clinical trials in 2018 for a drug that unfortunately failed to improve patient outcomes. But because they went public during the pandemic, when everyone was panicking about diseases, well, investors actually flooded into the stock where it reached a high of about $40 a share. However, since then, more commercial flops caused it to gradually lose around 80% of its value to where it now trades in just the single digits. There were times of upswings and optimism, especially when NVIDIA disclosed that they've become a large investor in the company, but overall, it's been a major downtrend for the stock price. But here's where it gets interesting. Now, yes, this is a company that loses even more money than they bring in through sales, but two things on that. Number one, all it would really take is one breakout drug to show promise for their financials to start soaring, which admittedly could take years, but it is something that they've actively been working on with several key drugs in their pipeline working their way through trials as we speak. And while that may not, catch the interest of any short-term minded traders, long-term investors may focus instead on the vote of confidence that they've already gained from tech giants like NVIDIA, as well as pharmaceutical juggernauts in Bayer, Roche, Sanofi, Merck, and more. Companies that likely wouldn't be pouring hundreds of millions of dollars into Recursion with the potential of billions if they didn't believe in their technologies and potential. That's number two. For example, NVIDIA, we know, has not only invested in the stock directly worth tens of millions of dollars, but they've also partnered with them to build what is literally known to be the most powerful AI supercomputer that is owned by a biotech in the entire world. That in itself gets me really excited about Recursion's potential. But when looking at the pharmaceutical behemoths, several have actually signed billion-dollar milestone deals, each with Recursion. For example, Bayer paid $30 million upfront with the potential of more than 10 fibrosis programs, each worth over $100 million in milestones, totaling more than $1 billion in all. Sanofi paid $100 million upfront with more than $5 billion in potential milestones, and Roche paid $150 million upfront with the potential of more than $12 billion in milestones. That's on over 40 different programs. Now, that doesn't include, by the way, some of Recursion's own in-house treatments that they wholly own themselves and could be even more lucrative for them down the road if successful. So considering that the market cap has now fallen to just around $2 billion, I just think that you'd only really need like one breakout treatment to make this stock soar, and that's why I'm buying some shares right now. Again, I only own a very small piece of it because I acknowledge the risk and I have the patience to wait through all the volatility. But considering how forward-looking the market tends to be, I just decided to buy a little bit now. I can adjust to it over time. Even if it continues to fall further, I like it as a small speculative play just in case for their future potential. But anyway, that'll do it for this month's video, guys. Let me know what you think about these down below. And thank you again for all of your support. By the way, something I didn't mention in this video, we talked about some AI stocks. Some of them fell more recently because of the whole DeepSeek fiasco. I did share my thoughts on that. If you want to watch a previous video, I break all of that down for you. So feel free to check that video out. But yeah, besides that, thanks again for all your support. I hope you're all doing well out there, and I'll have more videos coming for you soon. All right, take care, my friends. Bye-bye.